Hello there everyone, today is a video following on from my video of several days ago on share pooling. So when you dispose of stocks and shares, how to work out capital gains, particularly on crypto assets, but it can apply to any type of stocks and shares. Now I said in that video, which was all about the cost pooling method, I said actually there are exceptions to this, but I didn't want to complicate the video saying if you had purchased and sold the same type of security on the same day and within 30 days. So when you've got those two instances, it does slightly complicate matters. So this video, I want to carry it one stage forward and tell you exactly what that means when we throw those parameters into the mix. So there is a set of rules in terms of pecking order. What do you match off against first? So we're talking capital gains tax. Capital gains tax is always about disposing of something. So you dispose of some shares. So for the CGT, the tricky thing, like I said, is all about working out what's the cost to knock off those shares when you've been accumulating them, buying, selling them for quite some time. How do you do it? And I talked about the averaging pool, but that's only one. So in the pecking order, the actual pecking order, what comes off first? How do you match? It's called the matching rules. Well, number one, shares acquired on the same day. So if you buy and sell shares on the same day, the rules say that the shares that you've sold will be matched firstly against the shares that you bought in the same day. That's number one. Number two, shares acquired in the 30 days following the sale. Now, this is called, it's got a name, it's called bed and breakfasting. And basically, people may think, right, well, we're going to sell our stocks and shares of whatever we've got, a particular holding, purely for the reasons of saying, well, if we sell just enough, we've got this capital gains annual exemption that the taxman very kindly gives everybody every year. We used to be 12 grand, slashed in half to 6 grand this year. But anyway, tax free. So why don't we sell just enough to trigger a capital gain? Oh, but lo and behold, it's covered by the annual exemption and we'll just buy it straight back. But the taxman's cotton onto that, and he said, basically, yes, you can do that, but we're gonna match it against the CGT. We're gonna alter the rules so that it's not as beneficial for you to do that. So bed and breakfasting, that's the second one, and then in the order which you match, number three is the pool that I talked about in my last video, and then working out the pool, the so-called Section 104 pool, as it's lovingly known in the tax world, named after the CGT legislation, a Section 104 pool. So that's your pecking order when you dispose of shares. Same day, 30 days, and Section 104 pool. So let's have a look at a worked example. Again, totally made up these numbers, completely random. So let's assume you got this guy, Mr. X, he's got 10,000 shares in company Y at 31st of December 2023. So you've got 10,000, okay? Then, on the 28th of January 2024, so not so long ago, he bought 500 more shares of the same type. So it's shares in company Y. Again, following on from my last video, it could be shares in Bitcoin. Remember, it doesn't matter. But the point is, it follows the same rules for CGT. So he bought 500 shares on the 28th of January. So now he's got, what has he got? He's got 10,500 shares in company Y. Then on the same day, for whatever reason, maybe he was following the market closely and he thought, you know what? I want to sell 2,500 shares in company Y on the same day, 28th of Jan. Okay, so what you do, you just establish the fact pattern first, list it all out, like I said, get it on a spreadsheet, and then do the math. So, what happened? But then, a few weeks later, on the 17th of February, he decided to buy 1,000 shares in company Y. So, the 31st of December, he had 10,000, and within 6 weeks, he bought another 500, sold 2,500, and bought another 1,000. So, what do we need to work out? Well, we need to work out what's the capital gain on the ones that he flogged. On the 28th of Jan, he got rid of 2,500. So how do you work out the capital gain on the disposal of 2,500 shares? So it's that disposal of 2,500 has to be matched, and this is the pecking order. Number one, shares bought on the same day. Aha, yes he did, he bought 500 shares on exactly the same day. So on that disposal of 2,500 in your capital gains tax computation, 500 need to be matched against the shares on the same day. So in other words, you know what was the cost of those 500 shares bought on the same day? That will form the cost in your CGT calc for 500 of the 2,500 disposal. Okay, so next one, matching rules. Again, number two, bed and breakfasting rule, 30 days. So shares acquired in the following 30 days. So you have to look forward. So this is quite interesting because you can't just sort of say on the day of disposal, I can work out the capital gain because I've sold something. It's now history. It was 10 minutes ago. Let me work out the gain. No, because the rules say you have to look forward to see what you do in the following 30 days and then match it. And then you do your capital gain with certainty. You have to wait 30 days to do your CGT because of the bed and breakfasting rule. And sure enough, in the following days, he acquired 1,000 shares on the 17th of February. So that's within 30 days. So that needs to be matched next. So we've said, right, 2,500 disposed, £500 we've matched already, 500 units we've matched, 1,000 units we've matched. So the first 500 same day, next 1,000 following 30 days. And what's left of his disposal, which is 1,000, so 2,500 minus 500 minus 1,000 is 1,000. That then is matched against the Section 104 pool in that order. So you've got all the info from when you're creating your spreadsheet like I told you to do, to then just plug those numbers into the calculation. But in terms of the pecking order, what gets matched against what first, that is how you do it. 1, 2, 3. Same day, next 30 day, and your pool. So, just an overview there for CGT. Continuing on stocks and shares, cryptocurrencies, whatever it is. Like I said, life gets a little bit more tricky when you are buying and selling in the same day or within 30 days. But as long as you stick to these matching rules, it just governs the order. And it's pretty straightforward. It is in that order, same day, 30 days, and the pool. So if you like this video on CGT and the matching rules, please remember to hit the like button, do subscribe, and as always, I'll see you soon.